Welcome to Technical Tuesday. This is Fed Razak, Senior Trading Strategist here at CMTrading. And today we're going to be discussing sector rotation. But before we start, you know the drill. Share, like, subscribe, all of that so you help us build the channel and you get to add value to other people who are like-minded as you and want to pursue trading. Now, sector rotation, we've kind of delved into it, but on a different aspect of it, okay? We started out discussing different categories of assets that you can trade and you should follow. So there's stocks, there's bonds, there's obviously cryptocurrencies, gold, cash, okay? Different aspects of it, real estate, okay? There's a lot of things when it comes to trading at CMTrading, okay? There's Forex symbols, there's indices, right? And there are different categories. Now, these categories have what's called a subcategory of sectors, okay? Now, the market is made up, the S&P 500 is made up of several sectors, okay? There's information technology, which is really high tech. There's financials, there's healthcare, there's energy stocks, right? And they're segregated into different aspects. Now, when you're a huge financial institution like JP Morgan or any one of the financial institutions that invest in the markets, they have to purchase stocks and shares and all that stuff just like you and I do, on a computer, accessing it on the floor of the exchange. Now, there's no physical floor of an exchange any longer, but they have to access it the same way everybody else does, okay? And many of them are what we call market makers. They make the market, right? They hold a market maker status in a particular stock or a particular asset that they're trading, okay? They are both on the bid and the ask, and they really are there to make a market for that particular asset, okay? They require and they provide liquidity to the market, okay? Now, they also have inside traders, not inside trading, but inside traders that trade on the book that they have, okay, based on orders that they get from different financial institutions. So what happens is that, let's say you're in pension in South Africa, and the pension promised to bring your employees, the ones that are working for you in South Africa, 4%. Now, they take the money on a monthly basis out of your account, and they have a pool of money. Now, they have many pools of money from very different companies that invest in them. And as a result of that, what they do is that now they have a lot of money, and they can invest in the markets. Now, they promised you 4%. What they earn above that, they get to keep in their pocket, right? So what they'll do is they'll invest it in markets that are providing, you know, sometimes 10 to 15 to 20% returns, and they're keeping that difference. And the only way that they could get that is investing mostly in stocks that are growth stocks. Now, there are growth stocks everywhere in the world, but specifically in the United States, they are a larger number set of them. So most investors are looking to invest actually in the US markets, right? Everybody wants to take into Apple's success and wants to piggyback on that, right? So that's what essentially they do. So when money is being funneled into the market, there's something that we call sector rotation. And it starts out, for example, if there's certain news that comes out and everybody is looking at the banks, right? So there's JP Morgan, there's Morgan Stanley, there's Bank of America. There's many financial institutions that come under the banks. And what they'll do is that the investors will all of a sudden kind of focus and kind of bring their buying into the banks. So all of a sudden you see that the bank stocks are all green. They're all up on the day. That's what we call sector rotation. And then when that, if they've done that turn of investing there, all of a sudden, somebody will turn around and start investing in high tech, okay? And it'll continue rotating. And that's why I call it, if you've seen my daily reviews, I call it the market's rotating. It's going from one asset to the other asset, okay? And this happens specifically with the FANG stocks also, right? It goes from one asset of buying Amazon, all of a sudden it goes, and all of a sudden it just peters out. And then all of a sudden you see Apple going up, and the markets are going up still. And so there's different sector rotation that is being funneled. Now, there are different sectors that end up going higher. So there's energy stocks like oil that will go up. And all of a sudden, the stocks will go up. And then biotech, and it'll go to biotech. But the markets do this on a regular basis. And it's our job as traders to start analyzing this and to actually, make an observation of it, and then we could draw conclusions in anticipation of future rotations in the markets. And that's all it is. Sector rotation is a really great way of just focusing where the money is going, okay? Now, there's a great movie called Wall Street. It's done by Oliver Stone. It was sometime in the 80s, and it was basically based a lot of it on real fact truth, okay? Now, you could fact check, and I'm sure there's something on YouTube that fact checks the movie, but one of the things that it says there is that there was some news coming out about a certain company, and there was an insight in trading about it, which that's not what I'm talking about, but what they ended up saying is that there's being money funneled into it. And then it's just like wildfire. Once something is being funneled into something, okay, like any one of these sectors, once there's activity in oil or there's activity in biotech, right, Amgen goes up, money ends up going there, and then like a whole herd it's like flocks of bird in the sky, and they all of a sudden just one bird moves, and then everything just angulates towards that direction. And that's exactly what happens in the financial markets. And as traders, as analysts, it's our job to recognize these rotations and to anticipate these rotations and to take advantage of those rotations. Thank you for joining me today for Technical Tuesdays. We'll see you here next week.